Good evening, ladies and gentlemen. Today is March 3rd, 2021. My name is Yuan, and this is this week's market wrap-up. S&P 500 dumped again by investors as bond yield increases. The S&P 500, especially the tech sector, is facing significant downtrends due to harder borrowing to keep the company growth under the interest rate expectations and recent investor sell-offs. Meanwhile, this Tuesday, as President Biden announced that there will be enough vaccine on every adult of United States by late May, the economic recovery estimations provided the market with support. However, the benchmark rate of the Treasury yield climbed more than 8 basis points to 1.49% Wednesday, and bonds are now pricing in the highest 5-year inflation expectations since 2008, while rising concerns of the overstretched equity valuation and excessive bullishness. Post-Brexit London drafting plans to attract more IPOs and European tech companies to challenge the New York Stock Exchange. The UK government drafted proposals on relaxing the listing rules for attracting the special purpose acquisition companies that allows private tech companies bypassing the IPOs. Compared to only 3 SPAC companies listings that raised about 500 million last year in Europe, the US have raised a total of 17.8 billion across 244 IPOs in 2020. And the US SPACs have already raised more than half of what they did last year, just 2 months into 2021. The Europe have largely missed out the SPAC boom, while the UK government started taking actions on attracting Europe tech firms. Bitcoin jumped back above $15,000 Wednesday while getting more acceptance of institutional investors. Bitcoin rallied back and surpassing $52,000 after struggling at $50,000. It is reported that many institutional investors and hedge fund managers are investing in Bitcoin personally and publicly, which would lead less volatility of the price. Konstantin Kurgan, managing director of Wave Financial Group, have commented that weak support may be found in each key psychological levels and range where higher volume previously occurred, while strengthening as price lowering and become more attractive to a wider range of investors. While investors are debating whether Bitcoin could be a storage of value just like gold, or it will be only a bubble that's about to burst. Biden stimulus checks receiving eligibility being tightened as the White House agrees. President Joe Biden agreed to a faster phase-out of $1,400 stimulus checks that might further target the direct payments. The Biden administration is planning to pass the package by reconciliation. According to 2 Democratic sources, ceilings of eligibility have tightened as individuals making over $80,000 a year will no longer qualify for the payment. Moreover, the minimum wage will not be included in the package. Now let's see what happened with the market this week. As the market is influenced by expectations in raising interest rate, the North American market are seeing downward trends. The Nasdaq is down 4.41%. The TSX is down 0.79%. The S&P 500 is down 1.59%. However, there is an upward picture for European markets. The FTSE is up 0.75%. The CAC 40 is up 0.85%. The DAX is up 0.29%. Moving to Asian markets, which are facing pressures this week. The Hang Seng is down 2.01%. The ASX is down 1.08%, and the Nikkei is down 0.38%. In terms of currencies, the CAC has performed poorly today. In terms of commodities, WTI is down 1.3%, trading at $59.75. Brent has down 0.9%, trading at $62.7. Gold is down 5.2%, trading at $1,710.7. And copper, the base metal, is down 0.2%, trading at $9,266. Thank you for listening to this week's market wrap-up, and have a good day.